All right, folks, here we are on Trading Up. We've got Alex George in the house. We've just done a fantastic podcast. Go and check it out. He's going to tell you in that podcast how you can leverage the likes of social media in a very clever way to get better at trading. All right, so you've got to go and check that out after this video where he's going to break down a couple of trades for you, show you how he gets into these trades. And one of them is a 1 to 50 reward stock trade. So he's going to show you the Forex first, then a stock trade, and you're going to see how these approaches across both kind of instruments, which are different in the way they operate, can be used for technical analysis. So, Alex, over to you. CTI is giving away $40,000 to one lucky winner. You heard it right. That's a direct funded account of $40K worth over $2,300. What an amazing giveaway. No evaluation needed. You become a portfolio manager immediately once you're selected. And here's how easy it is to win. 1. Subscribe to CTI's YouTube channel. 2. Look for the video titled What is Prop Trading and How to Become a Prop Trader. 3. Give it a thumbs up. 4. Comment on why you deserve to win this free funded account. And 5. A winner will be chosen live on Thursday, 24th of March, 2022. So you have to hit that notification bell as well. I'll leave a link in the description with the steps you need to take.
Yep, cool. So I'm going to walk everyone through the UJ trade first, and I'm going to pretty much just almost practice what I preach, if you like, and kind of break down to you the whole thought process behind the trade and why it was like almost a quote-unquote textbook trade to take. So from the start, you can identify structure. Let's go to the 4 hour, right? So the higher time frame trade, you can see that UJ, right, is in a very clear uptrend, right? It's been trending upward, I think it was since the start of 2021. Yep, over here. Right, we'd literally been on a complete uptrend the whole way. So the first thing that you want to identify before you break down any trade is the trend, as I said, right, which is, you know, part of structure. So you can see the high lows, high highs, high lows, high highs. That is like I know it sounds so simple, but that is something you need to do in order to gauge like a proper direction, right? And obviously you can then zoom into more, a bit more recent. So you can see obviously the clear high highs, high lows, high highs over here. Okay, and then we actually ended up breaking this low. So anything here might have been a valid sell trade. However, we managed to just break up above and continue the uptrend, right? And then that's on the 4 hour time frame, right? Now, you want to go down to an even lower time frame, say the H1 or the 30-minute, and then identify the trend kind of within that range. So we've got a liquidity grab over here, right, which I'm not going to necessarily teach what it is because it's a bit more exclusive. However, that kind of dictated this new kind of mini downtrend reversal, okay? That dictated that as a whole. So we made, lower high, lower low, lower high, lower low, and then we ended up breaking this high here. Okay, and that kind of, again, like I said, shifts the trend. Now there are characteristics to structure within this whole thing, but again, I'm not going to like overcomplicate it and bore you guys, but I'm just trying to give you the very brief outlook of it. Okay, and then obviously you make a new low, and then what that means, right, after we get this break of structure here and this break of structure here, right, it means we are more than likely going to achieve this as a target. Okay, so we've identified our target, which is a point of liquidity, which is one of my exit strategies, if you like. Okay, and upon taking the trade, let me kind of show you where price was at, right? So it was around this time here. Okay, so it was Monday on the 7th of Feb, but Friday had very interesting price action. Okay, so what happened was price had pushed down after breaking these structure points and took liquidity here. Right now, this is liquidity because there are two lows there, right? Pushed down and had a very strong reaction up. Now, this is key, by the way. I want you guys to take note of this because it's probably like the first time I spoke about this publicly. But when you get a strong reaction, it shows that bullish order flow is intact in a very broad sense. Okay, obviously there is a bit more to it, but obviously you want to follow where order flow and structure is going. So obviously that gives you your new trading range, right? You have your low and you have your high, obviously on a smaller, on like a smaller scale, right? From that low to that high. So anything within a, what we call discount region, which is below the red line, is going to be a valid trade. However, this is very important for us, right? As you can see, we're on the 1 hour. Okay. Now, if we just bought solely based on the 1 hour point of interest, which was this wick over here and this inefficiency, if we bought solely off of that, then it would have been a good hypothesis, but it wouldn't have been a logical one, in my opinion, because that's almost guessing your low. And there are ways to almost confirm the entry, which I'm going to talk about in a minute. And we're almost copying this principle here of a good reaction onto a smaller time frame. I'll show you that in a minute. So once price approached this inefficiency down here, right, which was the top of this wick, once price approached that, that is when you refine down to your lower time frames. Okay. Now, this again goes back to the whole importance of structure, right? We've got high, low, high, low, high, okay? And then price, what actually ended up happening now is that price failed to breach this low here, okay? Now, it eventually started moving back up. This break of structure isn't too important for me. I call this post structure, but pre-structure, which is here, which is in the previous leg, all right, it's not post over here, it's pre. So once that breaks, that is when we could potentially see a reversal in trend, right? And this is on the low time, so this is on the 5 minute. So now we've broken this structure point. See, we now have our new trading range, okay? Because once this low breaks, that gives us our new trading range. So there we go. You see it just pierced it through, right? So that kind of validates this trading range here, or validates the high. So what do we do now? We look for trades within this miniature trading range, and this is the 5 minute, all right? So, it's not like we're guessing, because what we've done, we went from an hourly perspective, right, or went from an hourly point of interest, and instead of buying off there, we wanted our lower time frame confirmation, which is the break of structure here. So now we can have our entry at the open of the inefficiency here, and the stop loss would be below this wick here. Now, the reason it's below that wick, and this might be a bit of science for guys that are watching my way of trading first time, the reason it's below this wick here and not below that one is because this wick was already mitigated or tapped by this wick over here, right? So we closed and then open, push down, react. Okay, we had a strong reaction, which shows that the bullish order flow is intact, right? It's in our favor. So now what we have to wait for is for price to come down into this level here and hopefully see a reaction to the upside. And the thing is, if we react to the upside and we break this structure point, we're more than likely going to hit our take profit, which is the one that I said earlier at this high over here on the H1, right? 1 to 15. But the thing is, if this breaks, this wick breaks, this is more than likely going to reverse and continue falling a lot further down. Now, that's the beauty of the way we trade, is if you hit SL, right, you're out at 1%, and it just saves you from getting a massive, massive loss, because most of the time, if you hit SL with the way we trade, you'll more than likely see a reversal, right? Because you're trading in line with the trend, and you're trading in line with proper POIs, which are point of interests. And if the POI breaks, it means the volume breaks, right? And the order flow is disrupted, which means we could see a reversal in the opposite direction. Because if the bullish order flow is broken, right, that means obviously bearish order flow comes to power, right? Oh, let me do a down arrow. Okay, so if this came here, it breaks the buys, which means we more than likely get a pull in to wherever to see it fall further. And that is like heavily backtesting. You guys can backtest that for yourself. I've got a lot of that stuff on my channel too. So let me get rid of all the arrows. Over here. and price taps and eventually runs.
And can I ask a question here? So why did you pick that one there, that order block there, versus the one below? Because
so this wasn't an order block. This is
okay.
Yeah. So I first of all, I don't trade order blocks. However, so I don't know. I mean, it might be an order block, but that's not the characteristic I was going on. I was going off the inefficiency of price, which is here.
Right.
Pretty much skipping volume. And there is also there is volume within this wick as well. The reason I know that is because price pushed down and then we had a strong reaction. So clearly there is some form of buys in here. I think, we didn't come to tap. So I wasn't looking at this as an order block, but I do know, is that a characteristic of an order block? So I'm not too sure.
I'm not 100% sure either. I don't use them, but I get it's probably not one either. And the guys who know what they are exactly are probably thinking, he's talking crap. So yeah, that answers the question though. I can see the inefficiency there as well, and what you're going on about there. I know there's some other guys that are on the show that've been on or coming on that have that talk about that in a lot of detail as well. So if you guys want to watch that, it's Aerial FX, actually, their video. Now, let's have a look at this. So you're still in that trade, yeah? You're still in that trade?
Oh no, so that TP'd at 1 to 15 over here. You know what? Sorry, it's on the 5-minute chart. Let me go to.
It's going to take us a while yet. Okay, cool. Go. Yeah, and you got out. Okay, right. So you got out at the high there. Okay, brilliant. Okay. Let's have a look at the stock trade. So this is interesting. I'm really interested to see how this played out. And this is, how many stock trades had you taken at this point?
One. No. This is my first one.
Oh, this was your first stock trade. Okay.
Yeah. It was heavily back tested before I actually approached this way. So okay, I'll try to give a pretty quick insight, but good. So as you can see on, say, just AMGN, for example, right? A random stock I'd never heard of before. I went on to something called the earnings calendar. Now, every quarter, a stock or a company will have their earnings report, right? As you can see here. So it has their earnings and revenue. And what this does is usually creates quite a big gap in the actual market. So, for example, here, you can see there was a gap, right? For example, open, and then when earnings came out, there was open there and stuff like that. But that's pretty much what I traded. I bought at this point and pretty much closed out at this point, and I'll kind of just break down why, right? Now, as I said earlier in the video, don't listen to the people that are saying, oh, if earnings are good, then price should be good, or if earnings are bad, then price should be bad, or anything like that, because it's all crap, as I said already. What you want to do is utilize your technical analysis skills and use the technical analysis to predict the fundamentals, because it's a very cliche saying, but technicals are catalysts to fundamentals, right? Now, I trade something called, or I use something in my trading plan called the Wyckoff methodology. You might have heard of it before, invented by Richard Wyckoff himself. And he literally teaches a technical analysis style that pretty much shows where there is mass unloading of shares or positions, or mass accumulation of shares or positions. Now, that will only show up if people are selling. And why will people be selling? I'm talking about like the big CEOs, people who have the knowledge of, the earnings before they come out and stuff, like people that know the sales. Why would they be selling if they are bad? Why would they be selling if the earnings are going to be good, or if the stock's going to go up? You know what I'm saying? Because they know already that is going to be a bad outcome, right? And that's what a distribution demonstrates, or an accumulation in the opposite direction. Sorry, it's very. I'm trying to kind of compact it, so it might sound a bit complicated. But anyway, so I was pretty much, again, like I said, using technical analysis to give me a accurate prediction of what price would do upon the earnings report. So what I saw was we had low, high, liquidity grab, big reaction to the upside. Okay, so that kind of gave me, all right, we're in an intraday bullish trend. So I was just kind of like high, low, high, low, high, high, low. And what I found was, so we were trading up here, but we left something unmitigated, which is what I call an SC over here. right? This was, when I say mitigated, it just means something that taps. So say candle here, say if price is coming up. Mitigation is purely when it taps and runs, right? That is called mitigation. So I saw that this hadn't been mitigated by any type of price yet. We missed it here. We missed it here. What did this do? It printed liquidity. All right. So when market opened the day before, which was the 7th, where is it? 7th, open. Here it is. At 2:30 p.m. UK time, right? We obviously tapped it the day before, which was Friday, and then we came down and we took the liquidity of that wick here, right? Can you see that? We just came below, and then we reacted and we broke this mini structure. Now look at this, right? This is what's cool. Can you see that we pushed up, took liquidity, broke structure? Now let me go back to the H1. This is exactly what we did over here. We went down, pushed up, took liquidity, broke structure, and look how it went up, right? So I used that same ideology and used it on this point over here, right? We took liquidity and went up. And I took the trade on this SC over here because I was following the trading range rules, which I was talking about. Trading ranges are also a part of structure, by the way. Like structure is one big like word or one big topic, if you like, and there are like subtopics within it, and trading ranges are one of them. So I was using these, and upon market close, so market closed at 9:55, which is here, 9:55, so 9 p.m. Sorry, 8:55, which is 9 p.m. I bought in here literally about 15 minutes before the market closed, right? And obviously we closed here, so I was like, all right, cool. I'm going to wait for the earnings tomorrow, which is at 2:30. So literally I'll either open in a very big loss or a very big profit. And as soon as obviously the market opened, we opened literally all the way up here. And this was my trade. Hold on. So it's 50% of this SC here, because that's because of average volume. It was a 3. And you know what it was with IC markets as well, because this is what I was trading it on. It didn't like open on IC markets for the first 5 minutes. So obviously we opened here, and I was like, oh shit, I must be up like 30%. I'm like, you know, I'm waiting for it to open, and it wasn't opening. I was like, crap, what's going on? And then as soon as it hit 135, so as soon as this candle closed, right, I managed to exit. Okay, which means I literally exited at the very top, which was the 1 to 50 over here.
Wow. And
that was like, you know, my first ever stock trade gone very right. However, I think if I just say I sold, for example, just say I sold here and I had my stop loss, say here, right, and my TP down here, I think if market opened up here, I probably would have got stopped out here instead of being stopped out there.
Yeah. It would have been disastrous.
Yeah, exactly. Yeah. So I was I'm not even going to call it luck. It's not luck. It's just logic that I used based on what I know and how I trade. So it was good, you know, rule following, plan following trading. So that's why it worked out right. Yeah. But honestly, something all of you guys should go and try out and back test. It's really interesting, and do it based on your trading plan and your trading model. So that is it from me, my friend.
Hey guys, ever wonder what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining Hanko Trade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com, or there is a link in the description. Brilliant. Well, look, it's probably a good lesson for anyone wanting to jump into stocks and going, hey, look, this is going to be awesome, and then they forget about the gaps in the earnings reports, and next thing you know, their 1% is now 20% down. So there's a good lesson in there for everyone. Now, to wrap up, what's the best way for the guys to get hold of you?
Yeah, so best way to get hold of me is my Instagram, which is AMG_FX.
Brilliant. Well, look, guys, do remember we did do a podcast before this, so if you want to hear Alex's full story, whole bunch of tips and advice on trading, then there is a link to his page underneath the video here. If you are looking to get your mindset on track, check out my Genius Trader, links in the description, and also the Robot Builders Club if you're looking to automate anything. I teach you how to do that without doing any coding at all. It's over there on tradingnut.com. Now hit subscribe, hit like, click on that notifications bell, and we'll see you on another video.